If you're self-employed, a landlord, or running a small business in the UK, the way you deal with tax is about to change forever. Now, I mean properly change, and for a lot of you, if you aren't prepared, it's going to be a pretty painful adjustment. I want to talk to you about the Making Tax Digital for Income Tax changes. So from 2026 onwards, self-assessment as you know it is basically gone. Instead of doing one tax return a year, you'll be expected to send information to HMRC 5 times a year. So let me break this down properly. What it is, who it affects, and what you should be doing right now to prepare. So it's not too late when you get there. So first of all, what actually is MTD for income tax? At its core, MTD for income tax is HMRC forcing self-employed individuals and landlords into digital record keeping. This essentially means it's the end of the once per year submission that you might be used to doing in January, and instead you'll be required to keep your records digitally using software, submit quarterly updates showing your income and expenses, and still submit a final end of year declaration. By the way, if you were curious, the software that we're recommending to our clients to keep track of all this is Xero, so feel free to check that out, but there are other alternatives available. And if you want a discount for that, there should be one linked in the description. Now, HMRC say the reason they're doing this is to reduce errors and to help people stay on top of their taxes. In reality, what it actually does is it gives HMRC far more visibility over your figures far more often. There's also speculation that this form was part of HMRC's wider push for greater control over tax reporting, especially when combined with the proposed mandatory digital IDs. I'd be genuinely interested to hear what you think about this. Is this a good thing? Is it a bad thing? So let me know in the comments below your thoughts. So when is this going to affect you? MTD for income tax is being phased in based on a turnover basis, not profit. And this is where a lot of people are potentially going to get caught out because it's based on turnover, not profit. From April 2026, you'll be brought into scope if your combined income from self-employment and property is over £50,000. From April 2027, the threshold drops from £50,000 to £30,000. Now, my prediction is that over time, this will apply to anyone with turnover over £1,000, which is currently the threshold required to submit a self-assessment tax return. It's important to emphasize again, this is based on turnover, so your total sales, not profit. So even if you're making a loss or next to no money, you'll still be required to submit these returns if your turnover exceeds the thresholds. Another key point that a lot of people are getting wrong is that HMRC will decide whether or not you're included in that first band based on your 24-25 tax return. So the tax return that's already gone. So how is this actually going to impact the way that you run your business? First, you'll be reporting every quarter. That's 4 updates per year, plus a final submission at the end of the year. Next, you're gonna need to get rid of those paper records and those spreadsheets because you're not allowed to keep them anymore without using software as well. You're gonna need HMRC approved software that links directly into their systems. Again, I recommend Xero for this. There's a link in the description for a discount if you need it. Third, if you're a VAT registered individual business and your VAT quarters don't line up with the MTD quarters, you could end up needing to make 9 submissions per year. That's 9 deadlines, 9 chances to get something wrong, 9 opportunities for HMRC to start asking you questions. So this could be a real hit for some people. Now, for small businesses and landlords who are already stretched, this is going to be a significant increase in admin, stress, and cost. If you're feeling pretty hard done by after hearing all of this, I completely understand, I completely sympathize, because I know you're trying to run your business and manage your properties and not become part-time bookkeepers for HMRC. But unfortunately, this is coming in and there's nothing that you can do about it right now. So what can you do at least to prepare? If it were me, one option I'd seriously consider is getting my sole trader business incorporated as a limited company, because this can at least simplify submission dates, because your company accounts are only due once per year alongside your confirmation statement. Your personal self-assessment will also become far more simple because you'll only need to declare your salary, dividends, and a few other little bits once per year. You will potentially need to register as an employer and run payroll, but when this is set up properly, it can basically run itself on autopilot every month, so that's not a problem. Now, I know that's a lot, so if it does sound daunting, I want to reassure you that if you work with a proactive accountant who can communicate things to you clearly and regularly, this is something which you should be able to hand over fairly easily, allowing you to focus on what actually matters the most, running your business. If you have any specific questions about this, you've got one of 3 options. First of all, you can drop them in the comments below and I'll do my best to reply to each of them. Number 2 is to DM me on Instagram at josh.buffin.myeasyaccount. That'll be linked below and I can answer your questions there. Or if you prefer to speak to me one-to-one, you can also book in a call with me, which I have linked below. I'll be sharing a lot more information on this in future videos, so make sure you're subscribed to stay up to date. But that's all for now. So I'll catch you in the next one.